I need you to look. I know we've got the Dow here down 77, but look at the S&P down 1.25 points. That's it. That is the horse race we need to be watching. And even with 2 minutes left to trade, there's still money that can be made. My two next guests are going to tell you how they choose what to invest in. They've got a proven track record. Christopher Zook, the chairman and CIO of Kaz Investments, and Chris Zaccarelli, the chief investment officer for Independent Investor Alliance. Two Chris's. I'm going to call Christopher Zook. Christopher, what's your best idea when we get differing opinions and information moment by moment here?
Moment by moment, we try not to pay too much attention to, simply because of the fact that we're longer term in our focus. The main thing we want to look for is places where we can have the wind at our back and a theme that we can wrap our head around. In this particular case, markets are very expensive. We think that investors need to be very cautious, but where they do want to allocate capital, looking at tax reform, regulatory reform, and infrastructure spending causes us to want to be focused on energy close to the wellhead and materials that are going to benefit from a lot of the infrastructure spending we think is going to happen over the next several years.
Chris, tell me your top two sectors or top two picks, because people come in and they say, why and how did you choose these?
Sure. The two biggest places that we're invested in are financials and technology. Technology's had a great growth story. There's been a lot of earnings growth, and it's really been leading the way and been the sector to watch. Now, we've accumulated most of our technology in the last year and a half. We've been slowing down in terms of adding new positions there. But within financials, we still see opportunity. We see a rising interest rate environment. The economy continues to grow, and we're seeing a lot of tailwinds. So, again, looking for areas where you can have earnings growth, but also future growth. And I think financials is one of those sectors where you can still add to positions and do well 6 to 12 months from now.
Are either of you guys, and Christopher, I'll begin with you, trading around the tariff talk or tariff tantrums that we appear to have moment by moment with the markets?
No, we're not. We do not like to look at things that we feel are outside of our control. We look for persistency in places where we can forecast what's going to happen. And certainly in this environment, the tariffs in particular, every moment is a new challenge.
Chris, you could argue that financials, you can sense where they're going, because already financials have done absolutely beautifully. I mean, I think Citigroup up multiple percentages since the election. You know that if interest rates are rising, that tends to be good for banks. What indications do you get for your sectors?
Well, as far as what you're looking for in terms of indications, again, it's going to be where you see the earnings growth. So within technology, you've seen companies continue to deliver. You've seen them moving into new areas, whether that's 5G, whether that's looking at information security. And so there's always themes that you can play in terms of what's going to do well, not only now, but in the years to come. Within financials, it's interest rates, it's the credit quality that you're seeing in terms of the loans, net interest margin, which will, again, be the difference between short and long rates.